Imagine waking up one morning and checking your brokerage account to find an extra $1,000 waiting for you without having to do any work whatsoever. It sounds almost too good to be true, but it is possible thanks to a little-known investing strategy called dividend investing. In this video, I'm going to show you how dividend investing works and how to get paid to hold stocks. In fact, last month alone, I earned nearly $3,000 in dividends. And if you follow along with what I'm about to share, you could potentially make a full-time income from dividends alone. So let's get right into it. First of all, let me explain what dividends are. In the simplest terms, a dividend is a portion of a company's profits that they choose to share with their investors. When a company earns a profit, they can choose to either reinvest that money back into the business or distribute it to shareholders as a dividend. And when you buy a share of stock, you become a part owner of the company and are therefore entitled to a portion of those profits. Now, it is important to note that not all companies pay dividends, and those that do typically only pay them to shareholders, who actually hold physical shares of the company. This is as opposed to those who buy and sell stock through options or other derivatives. Also, there is no guarantee that a company will continue to pay dividends, as there are some instances where companies will suspend or reduce their dividend payments due to a variety of factors such as decreased profits or economic conditions. However, there are plenty of companies that have been consistently paying and increasing their dividends for many years, which we'll discuss later on. But first, let me walk you through an example of how much money you can make with dividend investing. For this, let's look at a popular stock called Coca-Cola, which currently pays a dividend of 3.24 annually. This means that if you own one share of Coca-Cola stock, you would receive a dividend payment equivalent to 3.24 times the price per share. So if you bought a single share of Coke at its current price of $64.71, you would receive approximately $2.08 in annual dividends. If you were to buy 100 shares of Coke, you would then receive around $280 in annual dividends. By continuing to buy more shares each month, you would eventually reach the point where your dividends alone cover your living expenses. Of course, this would require a significant amount of time and money up front, but the goal is to eventually get to the point where you don't have to work a traditional job to survive. Instead, you can spend your time doing things that you actually enjoy. The great thing about this is that if you start early enough, you won't even need to rely on Social Security, because your dividend income alone will be enough to support your lifestyle. Another advantage of relying on dividends to support yourself is that you'll never have to worry about running out of money. This is because when you invest in stocks, you're essentially buying a small piece of ownership in the company. And as long as the company continues to be successful, your investments should grow in value. Plus, many companies will also increase their dividend payments over time, which provides you with a nice little bonus every quarter. That being said, it is important to keep in mind that investing always carries some level of risk, and there is no guarantee that you'll be able to make enough money through dividends alone. So, now that you know the basics of how dividend investing works, let me share with you a few of my favorite stocks that pay high dividends. To start, we have ExxonMobil, which currently offers a dividend yield of 3.79. Exxon is an oil and gas company that has been paying dividends for many years, and they're one of the largest companies in the world with a market cap of over $200 billion. While the oil industry can be volatile, Exxon has shown a strong ability to adapt and innovate, and they continue to invest heavily in renewable energy sources, which makes them a good long-term investment. Next up is Verizon Communications, which offers a dividend yield of 6.52. As one of the largest telecommunications companies in the United States, Verizon provides essential services that are in high demand regardless of economic conditions. They also have a history of paying dividends, and have increased their dividend for 8 consecutive years. Another one of my top picks is Procter & Gamble, which offers a dividend yield of 2.58. P&G is a consumer goods company that manufactures and markets a wide range of products from shampoos to diapers and everything else in between. They're known for their strong brands and their ability to adapt to changing consumer trends, which makes them well positioned for continued growth in the future. Then there's Bank of America, which offers a dividend yield of 2.38. As one of the largest banks in the United States, Bank of America provides a wide range of financial services, and they have a strong balance sheet and a history of paying dividends. Additionally, they have a strong track record of increasing their dividend over time, and they have a relatively low payout ratio, which suggests that they have the ability to continue paying and increasing their dividend in the future. Another bank that I like is JP Morgan Chase & Co., which offers a dividend yield of 2.86. JP Morgan is another large financial institution that provides a wide range of banking and investment services. Like Bank of America, they have a strong balance sheet and a history of paying dividends. Finally, we have Pfizer, which offers a dividend yield of 3.27. Pfizer is a pharmaceutical company that develops and manufactures a wide range of medications and vaccines. They have a strong pipeline of new drugs, and they have a history of paying dividends and increasing them over time. Now, it is important to note that just because these stocks offer high dividend yields, does not necessarily mean that they read the best investments. It's important to do your research and consider a variety of factors before making any investment decisions. Additionally, past performance is not indicative of future results, and there is always the potential for loss when it comes to investing in the stock market. However, if you're looking for some reliable dividend-paying stocks to add to your portfolio, then the ones I mentioned might be worth considering. By investing in a diverse range of dividend-paying stocks across different sectors, you can help to reduce the overall risk of your portfolio while still earning a decent income. As you can see, it's definitely possible to make money from dividend investing, but it takes time, patience, and discipline. If you're willing to put in the effort, it can be a great way to build wealth and achieve financial independence. Thank you so much for watching, and please feel free to share any questions or comments you may have below. I'd love to hear from you, and I'll do my best to respond to as many comments as possible. Now, if you're looking for additional tips on how to grow your wealth, I'd highly recommend checking out this video next, where I discuss some of the most important money lessons that I learned from my parents. These are simple but powerful lessons that can help you make smarter financial decisions and achieve your long-term goals. So, click on that link and check it out now. Once again, thanks for watching, and I look forward to seeing you in the next video. Take care.